Good morning, everybody. It's the 26th of October. We are Signal Centre Talking Bull. I'm Joe, joined by Stephen Taff. Morning, gents.
Good morning, morning,
Hey Joe,
morning.
morning.
How you both doing?
Yeah, pretty good,
Very
thank you.
well, man. Very well.
Glad to hear it. Just a little chat off air there about the risk-on conditions that we saw yesterday across many markets. So looks like we could be poised for a bit of a move to the upside in some of these riskier assets. We'll come onto the chart shortly, but first of all, we'll get through the latest headlines and see what's driving this shift to risk. So latest headlines yesterday, the German data was better than expected. The IFO index declined marginally to 84.3 for October from a revised number of 84.4 previously, but significantly above the consensus forecast of 83.3. The IFO stated that a winter recession is coming, with the economy likely to contract 0.6% for the fourth quarter. It also reported that retail expectations had hit a new record low, but industry expectations had improved slightly, while 50% of companies are expecting to increase prices in the coming 3 months. The US consumer confidence number dipped. We saw the index go to 102.5 for October from a revised number of 107.8 and well below the consensus forecast of 106.5. So there was a sharp decline in the current assessment and smaller retreat in the expectations index. Maybe a situation there with bad news being good news, in a sense that we may see the Fed a pivot at some point and continue with sort of looser monetary policy and not raising rates as aggressively. The US yields declined. There was a strong rally after the New York Open with the which was a key element in undermining dollar support, with a dip below 148 against the yen. The dollar retreated overall against a basket of currencies, hitting a 2-week low. So we'll come onto the chart on that very shortly. In the UK, Rishi Sunak was officially appointed the Prime Minister, and he seems to have steadied the ship. Sterling secured slight gains into the New York Open before posting a strong advance amid hopes that Sunak's government can restore financial stability. Jeremy Hunt remained as the Chancellor and helped underpin market confidence with a strong focus on fiscal policy in the short term, given speculation that the medium-term financial statement scheduled for October the 31st will be delayed. Overnight, we had inflation numbers from Australia. Consumer prices increased 1.8% for the third quarter, which is above the consensus forecast of 1.6%. The data triggered expectations of a more hawkish Reserve Bank policy decision next week. We've got the Bank of Canada decision today. They will announce their latest interest rate decision on Wednesday, with a consensus forecast for a 75 basis point increase, taking overall rates to 4%. The bank will also release its latest monetary policy report, which will be important for forward guidance. So that comes around 3 o'clock UK time today. So that's it for the latest headlines. Let's get into some charts, shall we? Usually kick off with Taff looking at Bitcoin and commodities. So if you're happy to take over.
Yeah, today I'm gonna start with crude oil. All right, here we go. So crude oil, we've been having I think yesterday was the fourth day that we've just been having dodgy candles on the daily. That shows indecision, and neither the bulls or the bears are winning this fight, and we might have a continuation of that today. I'm slightly biased. I slightly have just a slight bullish bias. Let's see what it looks like on an intraday and why
I
I'm
love
saying
the I
that.
love the with your accent, Taff. Doji candles. You call them dodgy candles because it's a dodgy time in sort of like trend, because it's a sign of indecision. But it
Indecision,
sounds,
yeah.
when you said dodgy candles, I thought, yeah, that's the way
They're really
you
dodgy.
pronounce the word.
Yeah, that Zimbo flavor up in there.
Yeah, lovely.
Yeah. So so on an intraday here, I drawed this. We seem to be like in a triangle formation. Really, it's compression. Price is just being compressed from the bulls are compressing it from the downside, and then the bears are also compressing it from the upside. So we're really just playing in this zone here. And when this happens, I said yesterday that usually you look out for a breakout of the triangle, and but then it could break out to the top, it could break out to the downside. You need to have a really good crystal ball to know which side. But you need to just manage your risk here. My sweet spot for today is this area that I highlighted here. I'm looking for price to come down here. I think the bulls are going to support price here as they did before at the first support, which is 83.15. It's also an intersection of that trend line that I drew. So there's good confluence in that zone. So I'm looking for price to come down, and then the bulls will probably take it up. If it, I don't know if it will break the upper trend line, but definitely I think the bulls will take it up. Our first resistance here at 84.96 already, we can see that price is rejecting that level, and the bears seem to be taking price down. Um, the zone that I think that we're going to play in today, I think obviously I think we're going to be capped by the second resistance, and I think we're going to be capped also by the second support, which is 81.42. Second resistance zone is 87.14 up to 87.70. So yeah, I think pretty much we'll be playing around this area, but I have an inclination to a slight bullish movement based on this analysis here. Let's go to gold. Gold was bullish yesterday. Um, was bullish. It was supported. The bulls came and supported price at around the 1641 area. This level that I drew here. So it supported price, and we seem to be going further up, but we have a big resistance that are highlighted there, 1672 to 1679. Let's see what it looks like on an intraday basis. Here we go. Yeah. So we had beautiful price action here. We had this trend line that I drew here, and I spoke about how if price breaks something, breaks a level, a trend line, then usually it comes back down to retest it. I'd anticipated that this was going to be the retest that would take us higher. It didn't happen. Instead, price came further down to the first support and the trend line, and got some liquidity here. And then from here, it just got enough momentum, and now we seem to be. This would have been a good intraday trade for buy, and now we seem to be headed towards the first resistance here, which I
Like
also.
the signs of an inverse head and shoulders there as well on that short-term chart.
Oh yeah, like
which
yeah,
is quite nice. I get like that.
yeah. I think we can have something. We can have like a shoulder here and a shoulder here, and then we have our head somewhere here.
Yeah, nice.
Yeah, so it's this is looking really bullish. This is also on the backdrop. Yesterday the yields went down, and then the investors were just risk on. So the dollar went down as well. So this just gave good impetus to gold, and probably we would have a continuation of that. But I would be mindful of this first resistance zone here, this 1672 to 1679. I'll be really mindful of it. This would be a bad place to take any longs. If you hadn't gotten in already here, this is a bad place to really take any longs, because you're literally facing resistance. And up until a price breaks and probably retests this, then taking a long here will be ill-informed. So for intraday traders, you could actually have a nice intraday short from this resistance zone here if we get good rejection, and we see that price is correcting. You could get a short from here. So yeah, this is gold for today.
Where's
Basically,
second
we're going
resistance come in, Taff?
resistance is at 1672. So it's a zone really, 1672 to around 1679.
And the
This
second
this
one?
the second one is this is the upper boundary
Yeah,
of
channel.
the channel formation. So yeah, so that's what we should watch out for that. But I'll be
Yeah,
mindful of this really. This is
yeah.
close, and I'll be really mindful.
Yeah, the first resistance is a big chunk to get through if it does break.
It's a huge chunk to get through. Yeah, so buying now is really just putting your money to be taken away really.
Yeah.
All right, let's go to nat gas. Nat gas had with the continuation of the bullish momentum that we saw on that started on Monday really, and we seem to be going up to test our breakout zone. If you look, I drew this really medium-term trend line here that acted as support several times before, and price came down. We tested this zone here, which was also a previous swing low here, and we seem to have enough momentum, and price seems to be headed towards this trend line, which becomes resistance. Let's see what it looks like on an intraday. The momentum yesterday on natural gas was really big, and you can see it literally just went sliced through that resistance. It was resistance, but then it's now support. That six level that I'd indicated, it literally just sliced through. The momentum was really big there. What I expect to happen today is I'll still be long in anticipation of price testing that trend line breakout. But for me to get long, I want to see price come down and get liquidity on this first support here, which is that six level. If it comes here and we get good rejection, a good bullish candle, then it'll be a good place to probably take your longs and target the first resistance, which is around the 6.8, but it's a trend line, so it slants around that 6.8 level there, which is our trend line resistance, which was support before. So yeah, so I'm really looking for price to be in between the first support and the first resistance today, with my bias being bullish. Let's see what happened with Bitcoin. We had a breakout yesterday with Bitcoin. It's with really good momentum. I think there was also an announcement. I think the head of the CFTC made a comment that they classify Ethereum as a commodity now, and I think that just spilled over to Bitcoin. That's at loggerheads though with the Securities and Exchange Commission. So I think there's a bit of a tussle there going on in the States. But I think this gave good momentum. It gave impetus for the bulls to get in. So you can see I highlighted here there was a 19300 or 19309 level here. Price broke through that on Sunday, and then on Monday with the bearish candle, but it closed right above that level that I'd indicated, that 19309. And then I was anticipating a continuation of this bearish candle here, but price was also compressed. Let's go to the intraday. There we go. There we go. This is the price section that we had yesterday on an intraday basis. So you can see there was a lot of compression, the triangle formation here that was there. And again, like I said, when you have compression in price, then you're most likely going to break out. It can break out to the top, break out to the bottom. Here, I think the catalyst was that comment by the CFT chair, and this just took price. It was enough to just give impetus and momentum, and price just went off the roof here. We broke out this candle here. We broke out this triangle formation. We literally didn't even look at the first support, which was my resistance. We literally didn't even look at it. Price just went straight right through. And yeah, and now we're in between the first support, which is 19878 and 20463. This is also a reflection of the risk on profile that investors had yesterday. I'm sure Joe will talk about, or Steve will talk about, the indices. It was quite risk on yesterday, and we said that look, Bitcoin is really acting like a risk on asset now, so it's really mimicking that as well. So what do I envisage to happen today? I'm looking at my first support, that 19878. I'm looking at that resistance, first resistance, that 2463. I'm looking for any bullish continuation to happen. I'd want to see dips first. If I see dips come here on rejection, then I'll take that, possibly target the first resistance, and then second target will be the second resistance, which is 2833. So I'm bullish Bitcoin on the backdrop of that bullish candle that we had yesterday, but I'll be looking to buy only dips. All right, I'll leave it over to you, Joe.
Very much, Taff. Nice roundup there. So let's take a look at some of the FX markets then and what's happening there. All important moves in the dollar yesterday. So we've seen prices continue to correct here on the US dollar following really this big candle that we posted on Friday. And since then, prices stabilized pretty much on Monday, but have continued to move to the downside, and we are fast approaching this all-important support at 110.05. That's where we marry up with the trend line and the previous swing low that we posted on the 5th of October. So if we see a break simultaneously of these levels, then I think that confirms maybe a double top, potentially actually even a triple top. If we go by one top being there on the 29th, the second being on the 13th, and the third being on the 21st, then that would indicate that we will see lower prices in the dollar index over the short to medium term. In terms of where prices could potentially get to, we can take a measurement of that proposed top pattern, and that would indicate a pullback to around 105.35 on the dollar. It's had a fantastic move to the upside, so it's unlikely that this will be sustainable forever. Obviously, tops are generally not a moment in time; they are a process, and that's in maybe what we're in the form of doing at the minute. But it's not over yet for the dollar bulls. There still could be some buyers step back in here and continue to drive it higher within this dominant trend. One thing I did notice actually on the weekly chart, I mean, this isn't a classic sort of way of analysing markets, but the move to the upside has been obviously quite parabolic, as we know in the dollar index on the weekly. And if you touch all of the sort of lows with this curve sort of pattern or this curve annotation, you can see that we're actually in the process of breaking down below that on the weekly, and that may mean that we come to the end of this parabolic move. And generally, when that happens, you can get quite a sharp and aggressive move to the downside. So do be aware of that on the dollar index. Looking at the intraday quickly on the dollar, just to see where price could potentially go. This is the red line we highlighted yesterday. It's the swing lows from the 4th of October. So that for me is the key level to watch. It's pretty much where the uptrend meets that horizontal resistance line. And if that 110.06 gives way, then we can start looking for lower prices on the dollar.
I mean, that was a classic double top formation, really. That
Here,
break,
yes,
yeah,
absolutely, yeah, straight through that neckline there at around
measured move
111.
target of that is probably down around 110, isn't it?
Let's have a look, shall we? Let's measure it from there to there, and it comes in at 109.63.
Yeah,
That'll do. Okay, Euro US dollar looking interesting today. We have got a break of this bearish channel that has been overshadowing the price really for quite some time, going back to February earlier this year. So we're taking that out. We saw a close above it yesterday. We're pushing again to the upside today, up by 0.22% as things stand. Fast approaching parity, only 16 ticks away. This swing high from the 4th of October is the next level of resistance that we need to overcome. If we can get above that level, then we would expect a continuation to the upside. So we've got resistance around 100.60, then up to 102.36. So looking pretty strong on euro dollar at the minute, maybe close to confirming this double bottom pattern while simultaneously breaking out of this downtrend channel. So for me, the outlook is starting to improve there, and we may see a decent move to the upside.
so that basically parity is the clear
Parity is the level, yeah. If we can get back above that, then we're starting to look for higher prices.
Yeah.
And that will be on a closing basis as well, ideally. I mean, maybe that we get an intraday shoot up through the level and the sellers step back in. We need to see a close on that. I'm going to get to CAD CHF shortly. I've seen the request for that, so just bear with me one moment. Looking at cable, so we've got the downtrend in place. We seem to be stabilizing a bit at the moment. There seems to be a bit of a better feeling around the government that Rishi Sunak has formed. Hopefully he can make it his own, put his own stamp on it, get some really experienced people around him, and that is going to start stabilizing the markets. We're fast approaching resistance, pretty much at it actually, at 114.95. That's the previous swing high from this level here, back on the 5th of October, just burst through it there while on the video. So if we can hold on to this, see a break here, and then eventually take out this downtrend line, then we may see a fairly substantial move to the upside. So it could be a mixture of risk taking because people are encouraged or enthused by the double bottom or the bottom sort of formation that we've seen here, but also could be a fair amount of short covering, which could help exacerbate the move to the upside on this particular pair. Just going to take a quick look at some of the other US dollar pairs as well, just to see what impact they're having. Let's look at dollar CAD. So that for me looks to be forming a little bit of a top here on the daily chart. We've rallied into these major resistance levels at around 138.37 to 138.55 and feel like we are maybe sort of rounding off a little bit here, ready for a move to the downside. In terms of where the kind of break point would be, I guess it has to be these swing lows again from the 4th and 5th of October. If we start breaking down through there, then we can look for a deeper corrective move. Looking at dollar Swiss, we can see a major resistance here at around 100.50. We've seen numerous attempts at trying to overcome this. This was the big failure that we saw on the 21st of October. And again, has this feeling that we may be kind of rounding off. Or if we go by previously what we've seen on attempts at breaking through this level, it has generally led to quite a sharp move to the downside. So this is, again, more evidence that we may see the US dollar start to correct. In terms of dollar yen, that's still holding on to the uptrend. Obviously, we saw the intervention from the BOJ, hasn't really gripped this particular pair at the minute, and it's still holding on to uptrend support. If we get a break below the low that we posted on the 24th, which was Monday, then maybe we can start thinking about this unraveling a little bit further. Now, onto the request of CAD CHF. It's not generally the one that we spend too much time on because it's not as well traded, obviously, some of these majors, but it is one that I have highlighted over the last few weeks as maybe having some potential to move to the upside. I noted these huge levels of support that we've got on the chart dating back to August 2021. And we had sort of an upward sloping trend line there, although very shallow and narrow. It has done a job, and obviously focusing on these key lows as well, hoping that they continue to do a job of support and that we will see a reasonable bounce. This was the candle that interested me most, though. It was on the 3rd of October, really strong move to the upside, massive range posted on the day. I then highlighted 71.74, which was the previous high before that big breakout candle, as the key level that I'd like to be trying to buy dips towards. And since then, actually, I have traded this a couple of times to the long side on a personal basis, and think that a short-term bottom may be forming here, and we can start to see further upside. Of course, if we can break out of this channel, which is highlighted by the black boundary lines, then I think that really adds more conviction for me, and we can start maybe looking for higher prices into this white space that we've got on the right hand side. Key level today 73.38. If we can break that, then I'm even more convinced that we're going to start moving up even higher on this one. So
and oil inventory's out today as well, so we should get a bit of action.
Yeah,
well, not only that,
catalyst.
as we talked about, we've got the Bank of England policy decision, so that's going to be front and centre, really. So if you are taking any positions in anything linked to the Canadian dollar, you need to be aware of that. That's at 3 o'clock UK time. Expectations are for a 75 basis point increase, taking the overall rates to 4%. But the main thing that will be focused on is the 4 o'clock press conference, where they'll be talking about forward guidance. So it may not be the day to play Canadian dollar.
Why not? Why can't you do Canadian? Come on.
It depends what your risk appetite is, but there are likely to be is likely to be a fair amount of volatility in anything linked to Canadian dollar today. Yeah. Hopefully that was useful.
Lovely, that was great. Thanks, Joe. Yeah, Rishi, I think prepping us yesterday for tough times ahead, wasn't he, in his initial speech? So yeah, should see some additional volatility from now on. I'm going to share my screen now and show you how it should be done. First of all, I'll start with FTSE. Take a look. We've talked about the weekly. We've sort of like got a bit of a bottoming formations taking place in the weekly. Also on the daily chart, I've highlighted this inverse head and shoulders formation, which I still really like. 69.65 for me is the real sort of like short-term support level. Below that, we've got the shoulder levels and this decent area of support. But on a short to medium term basis, this looks pretty positive to me, and looking for further upside, potentially to target at least maybe a move to 7,330, which would be the measured move target for this formation. So looking pretty good there. A break back below 68.65, which is about 135 points lower. The average range of FTSE is 124 points, so don't expect to see that today. Then something's gone wrong massively for the FTSE if we see that. So at this point in time, buying dips for me is my favoured positioning. On the DAX, this is moving aggressively higher as well. We've broken above what I highlighted as key resistance, 12,946, 12,950, we'll call it, and broke above there, closed above there yesterday, in fact. So for me, that's a real decent sign of this turnaround. Again, you can sort of like see the squint a little bit harder than on the other charts, and you see a bit of a inverse head and shoulders formation, and this projection higher from this double bottom as well targets a move a lot higher. Next resistance is coming up. It's not far away, 13,146. That's the 61.8 from this move, and we can see the downward trending resistance line coming in around about where I've highlighted this resistance area. That's at 13,345 all the way up to 13,500, which is close to the 78.6% fib. So really looking at targeting this move higher as well. We've seen that dips over the last 3 days, some serious dips as well, have been bought into. Little bargain hunters coming, but for me today, that support at 12,946 provides an obvious level of dip buying support. Taking a look at the Dow again, we highlighted this last, we highlighted it on the 18th of October for the potential of a double bottom formation. We had a nice close above the neckline. We did get a pullback below there, all the way down to just in front of 30,055. Where the buyers really came in strength, and we saw this push up, this really nice strong candle last Friday's price action, engulfing the previous 3 days of correction and closing a lot higher. Now the measured move target for, let me just get rid of this chart, this ATR below. The measured move target for this double bottom formation is a move to 32,330. We're not far away now. Also, we've got 61.8% fib retracement from the previous swing high to the previous swing low. 61.8% retracement we love in technical analysis. That's coming in just above 32,100. And again, we're only 130 points away, and with the average range on the Dow at around 600 points. I've just deleted it, so I can't show you it. But yeah, there's plenty of opportunity for that. But 3 really positive, strong days. This risk on approach, is working out really nicely, and but not far away. We've got some resistance coming in. 32,630 is 900 points away. That's probably maybe a bridge too far in terms of price action today. On the downside, I'd keep a close eye on yesterday's low, which was 31,300, a break above there, and that may mean that we've had a change of heart, and the buyers are starting to take a little bit of profit. Nasdaq 100 hasn't really had that same sort of reaction. However, I really like this as well as an inverse head and shoulders formation. We're above the neckline. The neckline will be downward sloping here. I'll draw it for you, just to let you know or show you what I am talking about. Nice little left shoulder. There we go. I might have drawn it on the 4-hour chart, but I can't remember. So measured move target for this, we'll get the Fibonacci projection, which is like a really quick, easy way of doing this. And you're looking at a move to 12,330 for the, so still still a lot on the upside. Tech stocks have taken a bit of a hammering of late. That's why they're a little bit slow to react. Little bit of a word of warning. Yesterday's shooting star candle has put the EBGBs up me, and it stalled around about the 38, well, exactly at the 38.2% fib retracement at 11,685. Formed a shooting star. That's a decent correction, really. Overall, a play would be maybe, if you really fancy these indices, buying the down, maybe have shorting the Nasdaq as a sort of like some sort of hedge, some sort of coverage on that. But yeah, we stalled at the previous swing high resistance, so this could be building up for even a more complicated or more complex inverse head and shoulders. Who knows? But yeah, keep an eye on that support coming in at 11,378, and on the upside, that 11,685. So you've got a nice little 300-point range there, looking for a break either way in my eyes. S&P, quite a nice clean break yesterday of the neckline, the resistance of this double bottom. Let's just show you where the double bottom is. I know we had a spike lower here, taking that spike out of it. If we really the level of support here was 3,580, just coming in there. We didn't close below there, and we opened around there on a couple of occasions. So that is really the sort of like level of support. And again, if we sort of like project higher and see the measured move target for this is the same, basically it's 100% of the move from the low to the neckline, and then project it higher. That comes in above 4,000 on the S&P. So sitting there quite nicely, quite proud and looking good. Support 3,766, which was the most recent break, and also obviously the 3,807 is the neckline we've broken through and closed above. So we've had a little bit of a retest this morning, and rejected any breach below it. So looking quite positive on the S&P as well, and that's a nice the S&P, obviously 500 in the, companies in there, stocks in there. So that's a good gauge of the US and where that's going. Yeah, I suppose I don't know about the UK rates. How will that impact if we have more than 75 basis points, Joe? I don't know. What do you think?
Yeah, obviously higher interest rates wouldn't be seen as great, I don't think, because it's less money in people's pockets generally, because they're paying out more so for debt. I mean, I don't think there's huge swathes of the population that have got massive amount of savings that will benefit from it. So
and the mortgage, remember the mortgage rates as well.
Yeah. So
the thing is, I don't know whether we are sort of like slightly limited on the upside, and whether we will get that pivot from the Fed at some point, where because it is like we're in a position now where people are going to stop spending because they're afraid. The housing market's already slowing down. It feels a little bit more like a buyer's market than a seller's market, and any sort of like the interest rate rise today would be sort of like a real big
this is nothing from the Bank of England today. It's from the Bank of Canada today.
Sorry, I thought you were talking about Bank of England.
Yeah, no Bank of England today.
It's normally Thursday, isn't it?
November. Yeah, I don't think we've got next one till November. Obviously, we've got this budget for the Office of Responsibility on Monday, which will kind of set out guidelines about what they're trying to do and how they're going to achieve it and where the cuts are going to come from to support a lot of this stuff. But yeah, I think I agree with you, Steve. I don't believe this is the bottom, the overall bottom of where prices are going to bottom out. I just don't think we've seen enough capitulation in markets for that to be the case yet. But I'm very happy to try and run with the short-term rally, and hopefully it gives us a bit of excitement and we can make a few percent out of it. But I would say don't get loved up to these positions just yet. I think you've still got to be ready to
volatility.
To take your profits when they come. Okay, let's move on to the gun to the head challenge then. So this is where 3 of us pick trade ideas live on the video. Each of the ideas must have stops and targets. They're all placed at market and they've all got risk reward ratios in excess of 2 to 1. So obviously stop losses and targets accompanying all the ideas. We post these all to our TradingView profile, so if anybody wants to check them out, you can do so quite easily by visiting Signal_Center on TradingView. We didn't have a great time of things yesterday, got caught out by the move to riskier assets. So gold, we were looking at selling, but obviously we then saw it kind of post some sort of bottom, which we're not unhappy about because it gives us opportunity to try and trade it on the long side now. But yesterday's trade didn't work out on that. And Litecoin, looking for a bearish flag to form, started looking very good on the hourly. It was into a big resistance as well at 53.96, but this move to riskier assets mean that people wanted to own cryptocurrencies again, and that's absolutely fine. Big move to the upside. So it's always worse when you kind of get those ones that just nip you out by a couple of pips and then come back in your favored direction. But when things like this happen and they just keep going in a straight line, that's why we have stop losses in place. It's all about managing your risk and keeping your losses limited. Taff, you had a trade on Bitcoin as well. You were selling.
Yeah, that Bitcoin I got stopped out as well.
You got it on the screen. No, you got a new trade on the screen today.
Let me show you. Yeah. So I was looking to play that triangle formation and it just went all the way up, man.
And as we know, those triangle patterns, unless they've broken out, they can work out in both directions. And again, look how aggressive that move was to the upside. So that may indicate that things have shifted, and now we can actually start being more confident on the long side on some of these riskier assets, and maybe you'll see that in our trade ideas today. Taff, as you got the screen and you had one ready,
I've got one ready. I'm gonna play platinum today. I'm gonna play. You can see here it's been behaving in a pretty much predictable manner since here. You can see this channel formation here. It was correcting down, went all the way down here, and then it just broke out, and then it corrected down again, made a higher low here, and then broke out again, and then we've got this channel here. We made this higher low again, and then we are breaking out here. So I'm going to play this breakout here. Hopefully it reaches that 944 zone. So I'll play the market. I think this is 50. Yeah. So I'll buy the market at 924.5. My profit level is at 944.83, and my stop is at 916.01, and I'm looking to make a 2.39 risk to reward ratio. So we'll see how that plays.
good luck. Steve, you got one ready?
No, I haven't really. I was going to go gold again, but licking my wounds from yesterday.
Yeah, I wanted to take a look at cable because it's breaking out here above resistance at 114.90, but I'm losing a few ticks, and I think that's going to negatively impact my risk reward. Wanted to target a move to these swing highs here at 117.37.
Yeah, I mean above 115, I think it's like blue skies, mate.
All right, let's have a go then, shall we? Let's just move it up a little bit. Okay, so I'm going to buy it. It's currently at 115.43. Going to target a move to 118.61. Stop loss at 114.22. So pretty large ranges, really. But let's see what happens. It's starting to look a lot more positive now, and yeah, we're all getting behind Rishi and his crew, and hopefully they can sort it out and make our currency worth a bit extra. Okay, that's my gun for the head trade today. It's going to get posted up. I'll just adjust those levels slightly, and yeah, feel free to follow throughout the trading day. Steve, that give you enough time? Probably didn't, did it?
Probably didn't, mate.
Anyway, but so you better hurry up.
Well, listen, I'm sort of like I went short of gold yesterday, and obviously got my ass kicked. But we're sort of like heading right into this big area of resistance. I mean, it is quite big. It's really, for me, once we need, gold needs to be above 1730 for me to get positive, and that'll be a double bottom formation. So until then, I'm still looking to sell into rallies in that, but I feel a bit like it didn't really hold yesterday. So silver, I'm looking at silver and going to sort of fade silver instead. How about that? I'll let the gold off today. I was getting short of, let's call it 1962, just so you know how I like to write round numbers up. Stop level 1982. Where does that leave it? Yeah, that's not a bad one. Yeah, I'll go for a 3-to-1 risk reward on this. I mean, I'm selling silver in front of resistance, both this swing high resistance and the 38.2% fib. And there's like larger resistance around here as well. This is like around about where we've had a good pivot before, and really looking for it to come down to basically this area of support, trend line support down here. So that's me going short of silver. Really not a great one, I don't think, but we're still bearish, still in a downtrend at the moment, as far as I can see. So short term, looking to sell rallies.
Okay, superb. Thank you very much for the coins there from TradingView directly. It's very much appreciated. We, as I said yesterday, over 30,000 streams now on TradingView. So we hope we're doing something right and everybody's enjoying it. And obviously, feel free to get involved in the chat along the way and post up any ideas or charts that you're looking at, and we'll be very happy to check them out. In terms of the day ahead, let's just quickly round that off. We've got the Bank of Canada policy decision, as we've talked about a couple of times already. That's at 3 o'clock UK time. Then we've got crude inventories at 3:30 UK time, followed by that press conference from the Bank of Canada. So yesterday we had some earnings out for some big hitters, and that's maybe why we saw a little bit of a dip in the US markets into the open this morning, because I think a few of them disappointed. Later today, we've got Coca-Cola, Microsoft, Alphabet, and Twitter all coming out with numbers. So keep an eye out for those, because they could have an impact, certainly on the Nasdaq in the coming hours. Throughout the rest of the week, tomorrow we've got the ECB policy decision that will of course be well watched, and could be quite pivotal, as could the Bank of Japan policy decision, which is due out a day later on the 28th. So that's that from us for today. That's my last talking ball for a week, because I'm off on holiday. So handing it over to you two guys to hold the fort. So please be gentle with them, and keep it nice, everybody. Have a great weekend. Yeah, cheers. Have a great day. Bye bye.
Cheers. Bye, everyone.